So guys, how are you guys doing? Welcome to another episode of my YouTube channel. So guys, as I always say, this channel is based off on forex content, both for beginners, advanced traders, or professional traders, any sort of traders you are. So today we are going to be talking about entries and entry confirmations in the financial market. Please, if you know that we have not yet watched my previous video based off on zones, please, I want you to go and go back to my previous video I did based off on zones. Make sure you understand what zones are and make sure you know how to trade them. Zones are very, very important. Guys, I don't know if I'm making sense. Zones are very, very important. It's just like more or less like if you don't understand market structure, you can never understand zones. And if you don't understand what zones are, you can never understand what these entries and entry confirmations are. Guys, I don't know if I'm making sense. So let's proceed without wasting any further time. So when it comes to the financial market, so when it comes to the financial market, as I said on my previous video, we have this guy to the upside. This guy here to the upside, this is a high. This is a higher low. So remember, I told you guys that what classifies a break of structure simply means when market take out this guy up here, this guy up here, this is called a break of structure. But if market stays below this guy, this is called a manipulation, please. And this is called, and this, like all these big, like all these hedge funds and all these like big investors on the financial market, they want to take out your SL before this trade start pushing to your direction. So please sit out until the body of a candlestick closes above this guy up here. So now, as I just said, please, if you know you have not yet watched my previous video based off on zones, go back to my previous video and make sure you understand what zones are. Come back to the charts, know how to trade them. Practice and practice. Guys, I don't know if I'm making sense. Good. So when next we have this guy retracing to the downside here. Now, this is where your zone comes in. You pick up this of Fibonacci 2. This guy down here, as I always say, you start from the lowest week of this higher low down here, you extend to the highest week. Go back to my previous session. If you don't know how to set your Fibonacci settings, please. I did all this on my previous videos. So make sure you understand them. It's very, very important. Now, the problem here is that when market comes back to this zone down here, this guy down here, how are you going to enter your trade? Now, this is where entries and entry confirmations comes in. This is what I will be teaching you guys in today's video. Or will I say in today's session? So guys, am I making sense? So guys, let's proceed. When it comes to entries and entry confirmations, just as the name implies, when it comes to entries and entry confirmations, first of all, ask yourself, what are entries? One sec. So when it comes to entries and entry confirmations, guys, first of all, ask yourself, what is an entry confirmation? So when it comes to an entry confirmation in the financial market, it simply means how you execute your trades, how you execute your trades when market, or will I say when price touches your zone, touches your zone. Now, if you don't know or understand what zones are, please go back to my previous YouTube channel and make sure you understand what zones are. Because as I just said, if you don't understand zones, you can never understand what I'm about to teach you guys. I don't know if I'm making sense. Good. Now, what are entries and entry confirmations? It simply means how you execute your trades when market touches your zone or when price touches your zone. I don't know if I'm making sense. Now, when it comes to types of entries in the financial market, we have mainly two types of entries. It's just like more or less like once this guy now, this pulls to the downside. Remember, I told you guys that this pulls to the downside. You can also call it a retracement, retest, or a pullback. You can also call it a correctional move. Guys, I don't know if I'm making sense. Good. So it's just like more or less like once market touches this zone now, as a trader you are, how are you going to enter this trade? This is what I'll be talking about now. Now let's proceed. When it comes to the financial market, you have mainly two types of entries. You have two types of entries. We have one, we have aggressive entry. One sec. We have the aggressive entries. Please don't rush things. I'll still come back and explain all these things to you guys. We have aggressive entries. I will also have we have the conservative entries. So these are just like the two main types of entries we have in the financial market. Just like more or less any sort of traders you see out there, they must either use one of these entries. So when it comes to aggressive entries, what are aggressive entries? Aggressive entry simply means, one sec. Executing your trades. So guys, sorry for the delay. Aggressive entry simply means executing your trades once market touches your zone without any further question asked. So guys, it's more or less like, as I just explained to you guys, aggressive entry simply means executing your trades once market touches your zone without any further question asked. What am I trying to say? Okay, it's just like more or less like, I told you guys that we have this next candlestick, the chasing to the downside. Now, as an aggressive trader, you are. That's if you want to be using this aggressive entry. How do you want to enter this trade? Are you going to enter aggressively or conservatively? Now, if you want to enter aggressively, it simply means once market touches this your 0.618 now, we are going to press buy on your MT5 or your MT4. Guys, I don't know if I'm making sense. Good. So it simply means once market touches this your zone now, this was 0.618, we are pressing buy automatically without looking for any further confirmation or any questions asked. Guys, I don't know if I'm making sense. Now, when it comes to conservative entries in the financial market, conservative entry simply means. So, guys, conservative entry simply means looking for extra confirmations once market touches your zones. Now, guys, under these conservative entries, guys, we have two types of entries under these conservative entries. Please pay good attention to me. Under this guy down here, under these conservative entries, we have two types of conservative entries under this guy down here. Number one, we have candlestick confirmation. What's that? We have candlestick confirmation, and we also have shift in market structure confirmation. Guys, I've already taught you guys what shift in market structure are. Also call it change of character. They're all the same. Shift in market structure confirmation. Shift in market structure confirmation. So guys, under candlestick confirmation, now under candlestick confirmation, I'll still teach you guys. Maybe there are a lot of candlesticks out there you can use for confirmation, but based off on my own experience on this financial market, I'll only teach you guys just three. Number one, bullish pin bar. I'll teach you guys bullish pin bar, bullish and bearish pin bar, and bearish pin bar. I'll also teach you guys doji. I'll also teach you guys engulfing bar candlestick. Engulfing bar candlestick. So number one is more or less like, remember I just told you guys that under these conservative entries down here, we have two types of entries under these conservative entries. Number one, so let me change this color. Number one, we have candlestick confirmation. This is under conservative entries. And we also have shift in market structure confirmation. Now, under this candlestick confirmation, this guy, please pay good attention to me. Under this candlestick confirmation, under this candlestick confirmation, under this candlestick confirmation, we have the bullish and bearish pin bar, we have the doji candlestick, and we also have the engulfing bar candlestick. Now, what are bullish and bearish pin bar? Bullish pin bar, just as the name implies, I just told you guys that aggressive entry simply means once market touches this your zone now, you are executing your trades immediately without any further confirmation or without any other question asked. I don't know if I'm making sense. Now, if you know that you want to enter your trades conservatively, of which 90% of traders always uses this one or something like that. Guys, I don't know if I'm making sense. Now we are going to look for a candlestick called bullish and bearish pin bar, doji, or engulfing bar candlesticks. Guys, I don't know if I'm making sense. Now, when it comes to bullish pin bar in the financial market, when it comes to bullish pin bar, we have something like this. Remember that these candlesticks must be inside your zone. It must be inside your zone, inside your zone. So when we have something like this, we have this body here. This body is always green in color. Please, if it's not green, when it comes to this bullish pin bar, if it's not green, please don't use it. What classifies a bullish pin bar is that number one, it must be a green color. Guys, I don't know if I'm making sense. And sometimes, not always, this bullish pin bar, maybe you can see something like a little wick up here, just a little, just a very little wick up here, like a very little wick. I think all these things is black. All these things is black. Why this body, it must be green. Please, if the body is not green, don't use it. What classifies a bullish pin bar is that it must be a green body. And sometimes this week up here, sometimes this week up here. So guys, sometimes this week up here, this week up here, you won't see it at all. I don't know if I'm making sense. So guys, that's for a bullish pin bar. When it comes to a bearish pin bar on the chart, we have something like this. Then we have this body. Please pay good attention to me. Pay good attention to me. I'm not going to repeat this session. We have something like this. We have red body. This is if you want to sell bullish pin bar. If you are buying, one second, let me write this down for you guys. So when it comes to bearish pin bar, it must be red in color. And sometimes you have a little wick, just a very little wick down here, like beneath this low down here. Just a very little week. This week here, just a very little week. The week will not become like let's say like just a very little week. I don't know if I'm making sense. Then this one up here, it must be a long week. Then this one down here, just a very little week. Please, don't worry, I'll show you guys some instances on the chart. So that's for a bullish and bearish pin, but it's just like more or less like if you want to enter your trade conservatively, it's just like more or less like once market touches this your Fibonacci zone. Now, what are you looking for? You are looking for this guy up here, this bullish pin bar. You are looking for this guy. It's just like more or less like you are looking for this guy up here. Remember, I told you guys if you are buying, you are using this guy up here, this bullish pin bar. Now, another thing I want to tell you guys is that you cannot just look for like all these candlesticks on the 1 hour. No, it must be on the 15 minutes time frame. Guys, I don't know if I'm making sense. And mind you that this candlesticks, bullish and bearish pin bar, doji or engulfing bar candlesticks, it must be inside your zone. And it must be on the 15 minutes time frame. Guys, I don't know if I'm making sense. But it's just like more or less like once market touches this my zone. And that's if you want to enter your trade conservatively. What are you looking for? That green guy candlestick with a little wick above this level. Sometimes you see a little wick above that level, then below this level, long wick. This is what I'm looking for inside your zone. So guys, this is what you're looking for inside your zone. This guy, this bullish people, that's if you are buying. Then if you are selling, it's just like the inverse. It's like if you are selling, it's just like the inverse. What are you looking for? That red guy, that red candlestick. Please, what classifies a bullish pin buy is that number one, it must be, guys, can you hear me? Pay good attention to me. What classifies a bullish pin buy is that it must be green. If it's not green, please don't use it. If it's red, don't use it. It must be green in color. Bullish pin bar must be green in color. And number two, it must be inside your zone on the 15 minutes time frame. Why what classifies a bearish pin bar is that it must be red in color. And sometimes you just see a little wick beneath this low down here. And also it must be inside your zone on the 15 minutes time frame. Now it's just like more or less like once you see this next candlestick now pulling up to the upside, once market touches this your zone, that's if you want to enter your trade conservatively. What are you watching out for? You're watching out for this guy, this bearish pin bar, this guy. You're watching out for this guy. You're watching out for this guy, this bearish pin bar. You're watching out for this guy, this bearish pin bar. This is what you're watching out for anytime you want to take your sales. Guys, I don't know if I'm making sense. Good. Now let's proceed. Once you see, like as a professional trader you are now, once you just find out that, let's say, maybe this candlesticks now has formed inside your zone. Now, another question is that how should I enter? Now, this is where like most of you guys like always find it very, very difficult. Now, your entry at the close of that candlestick, at the close. I don't know if I'm making sense. At the close of that candlestick. Now, at the close of that candlestick. Your SL, your SL should be a few pips, just a few pips, a few pips. Please always give it a breathing space because sometimes market like sometimes market might come and do something like this, play around this place, week above that, take our liquidity above this level before it start pushing to your direction. Guys, I don't know if I'm making sense. Good. But like you shouldn't be too high like that. Like just target somewhere around there. But make sure you always give it a breathing space. It depends on the body of let's say the bullish or bearish pain bar, guys. I don't know if I'm making sense. Good. Now you target this guy down here. So guys, another thing I want to tell you guys is that why are you targeting this guy down here? You are targeting this guy down here because you are targeting this guy down here because if you observe now, when market starts pushing down again, market has already created a first leg double bottom. Guys, can you see that this is a first leg? Please pay good attention to me. The market has already created a first leg double bottom. If you observe now, you see that if this next candlestick now start pushing to the downside, there's always this high probability, or will I say 99.9% probability that the market will touch this same level, create a second leg double bottom and reverse. So that's the reason that, like, it's just like the reason that we traders want to take out our profit before that shit even happens. Guys, I don't know if I'm making sense. So it's not hard. It's not like I'm not saying that it's not hard, but as time goes on, you'll find it very, very easy and simple. Guys, I don't know if I'm making sense. So that's it for bullish and bearish pin bars. When it comes to doji candlestick, when it comes to doji candlestick, as a trader you are, doji candlestick is actually one of the most powerful candlestick in the financial market. Even I myself, I personally use it, and trust me, doji is very, very powerful. Sometimes I feel like doji is the most powerful. It's not like the bullish and bearish pin bar doesn't work. They all work. Engulfing back candlestick, they all work. But when it comes to doji, doji is the most powerful candlestick ever in the financial market. So who is this doji? Doji is actually very, very simple. It's just like a plus sign. Doji is just like, I think, it's just like a plus sign. This is how the doji candlestick looks like. It's just like a plus sign. It's just like a plus sign. So guys, when it comes to you using this doji candlestick, please note, doji, sometimes not all dojis on the chart works. But today I will teach you guys a lot of things behind this doji candlestick so that you won't fall for manipulations on the chart. When it comes to you using these doji candlesticks, we have two major things that governs a doji candlestick. Number one, this is for buys. Number one, it must be a red doji. And number two, it must be Coming from the move that push price down. That's push price down. Guys, please pay good attention to me. Push down. Now, what am I trying to say? As I said, there are a lot of fake doji candlesticks on the chart. I don't know if I'm making sense. Now, as a professional trader you are, this is how you master candlesticks. There are two basic things that govern